benefits, the shelter, the appreciation, and all of that good stuff. Or you also could be on real estate, not in real estate. And what I mean by that is that you occupy real estate, whether it's at your office or whether it's at home. And if you're at home and you're paying rent, you're on real estate and you're giving the benefit of the rent to the people in real estate. If you're on real estate at work, well, the work that you do generates the income for the company that pays the rent for those on real estate that rent to the business. So if you had the choice, whether to be in real estate or on real estate, I think the clear winner is to be in real estate. But a lot of people think that they can't do it. And that's what this real estate show here is really all about. The object, the mission of our real estate show is to empower more people to be in real estate, for more people to have a piece of the American dream, to have the ability to have the benefits of being in real estate, to have the tax benefits, all of the benefits that you have here that I just went through. So stay tuned. Monday through Friday, we're here live 5 days a week on the Real Estate Show. We are here live at 5 p.m. 5 days a week, as I mentioned. In fact, we're actually on a sixth day. We're live 5 days, but on the sixth day, we are on Sunday starting at 9 o'clock. We have a back-to-back marathon. So you get your daily dose of the real estate during the week. You get your mega dose of all episodes starting from the beginning to the end from 9 p.m. right on back-to-back, each one of the shows. So if you kind of want to follow, and we have our Mondays on a mission where we talk about what is our mission for this week? What's our overarching theme and what we intend to cover. Then we go to Tuesdays, and then I like to make it real. And on Tuesdays, we do our tools, tips, and techniques. And we talk about the theme as we set out on Monday, but now in practical, more importantly, applicable things that you can do to benefit from listening to the Real Estate Show. And then on Wednesday, like yesterday, we have our midweek report. And there's where we talk about the state of the market, where we are right now, the state of the economy as it refers to real estate, all of those good things. And hopefully now you can sort of tie in and validate a lot of what we're talking about, because what we're talking about is what's current and what's important. Then we move into our Thursday edition of the Real Estate Show, where we're going to talk about the money. And so that's what we nicknamed this show, is the ATM edition, about the money. And we talk about all aspects, because you can't have a very long conversation about real estate without finding out very soon that money comes up. You know, where's the down payment? Where is the monthly payment? How is the profitability? And all of the financial metrics and the benchmarks that you want to watch to see that you're making all the right decisions in real estate. And so, you know, this week we've been talking about sort of the state of where we are, the question about what to do next, given the impending lifting of the moratoriums, probably one of the top concerns for at least 2 million people out there. And so what should you be doing? What are some of the options? And there were two things that I wanted to talk about today. You know, one of them, which I thought was very interesting, because I've been having a lot of conversations with people about whether it was the right time to refinance. You know, interest rates came down again. And so if you want to learn a little bit about that, then you definitely want to communicate with us. And the easiest way to do that is to text the word loan to 561-861-2366. Once again, that's 561-861-2366. Text the word loan. And then what you can do is that we'll have a conversation. In fact, we'll also have a conversation a lot like this one today. And so because of the way that things are rolling out, and as I mentioned, you got to talk to your lender, because there are about 7 or 9 different ways to avoid foreclosure. So anybody in forbearance today, anyone who is not making their mortgage payments today ought to be considering one or more of these 5 or 7 to 9 ways to avoid foreclosure. And one of them, the first one, is the idea of refinancing your mortgage. Now, if you haven't been making payments at all, then this is not going to be an option, because there's a very interesting, and in fact, I'm finding out very seldom discussed concept amongst the lenders, is that if you have a mortgage that you have not made payments on, they consider that loan a rescue loan, and they don't do rescue loans. The conventional lenders don't. Your big box banks, your conventional mortgage lenders, they won't do a rescue loan. So if the property is currently in default, even if it's in forbearance, which is technically not in default, can't even report bad credit, but no payments means to the banks an inability to pay, and they're not going to do a rescue. But so now you've got to look at a couple of different alternatives of how to approach that. And so obviously you got to start getting a little bit creative. And creative financing for real estate really just refers to uncommon or unique ways that an individual can purchase their property or refinance their property. And often this is, or I should say most often, this is done by an investor, but it could be a home buyer just as well. And basically they would use one of these. I have about 25 different creative financing techniques that I use. And you could use not only each one individually, but sometimes you can use some of these in conjunction with one another. So you could use one or more of these creative financing methods when you want to either get out of a forbearance, or even you want to use as little of his or her own money as possible to buy a place. That's why, remember, you want to plug this number into your phone. You're going to text the word today is loan, and that's 561-861-2366, and text the word loan if you want to have a conversation about some creative financing for your real estate, whether it's to get you out of forbearance or whether it's to get you into a property. So if you've decided you're ready now to buy a home, or ready and to get out of a stressful situation in a home, but traditional banks are basically accusing you of being less than perfect candidate, whether it's because your credit score is low, or you don't have enough savings to afford a 20% down payment, whether it's the inability for you to verify all of your income. Maybe some of it comes in cash or from a business, i.e. the marijuana business, i.e. the tattoo business. There's a number of businesses out there that banks simply tend to turn their backs on. So here is a smattering of the different techniques that we have. They start from a cash out refinance on an existing property, assuming that it's currently being in payment mode. Home equity line of credit. Maybe this is a home equity line that's been dormant. They're sitting there, has equity in there, available and open for you to use. You might be able to use that. Think about that. If you had a home equity line in place before you went into forbearance, you might be able to go draw on the home equity line to bring the first mortgage current, and then get back on a safe and budgeted plan going forward. Which reminds me, and I think I have to defer some of this conversation for tomorrow's show. And here's the question that you might want to ask yourself. And this is a term that many of you may not have heard. Is it better to refinance your loan or to recast your loan? And recasting came about back in the early 2000s when, if you recall, they had these option or multiple option payment loans. You could pay minimum payment, which often involved paying less than the interest or negative amortization. You could pay an interest-only payment, for the month. You could pay it as if it was amortizing over 30 years. You could make the payment as if it was amortizing over 15 years. And every month, believe it or not, you got a statement that gave you 4 different payment options, and you could choose which one. And as long as you made one of them, and even the negative amortization, which allowed you to make as small of a payment as possible, great for cash flowing properties or people with highly fluctuating incomes. This was a great thing. And then you got to a certain point where the options would go away. And at that point, they would recast the loan, meaning take today's date, the number of payments remaining, the interest rate today in the market, and now recalculate everything as if it was today. And not too many people know how to recast your loan, especially an existing loan. And luckily, if you're listening to the Real Estate Show, you know somebody that does. Again, so if you want to learn more about any of these strategies or techniques, how to get yourself into a property or out of a mess, text the word loan to 561-861-2366. Once again, that's 561-861-2366. We're going to go ahead and jump into a break, hear a few words from our sponsors. But when we come back, I'm going to get into more of these creative financing techniques. You want to know these things now, especially now. You definitely want to be on top of your game when it comes to financing. And that's what the ATM, About the Money edition of the Real Estate Show is all about. So don't touch that dial. You're listening to the Real Estate Show. My name is Eric Willner, and I'll be right back. Oh, you got to love it. So if I could only get out of this program here, I think what I got to do, let's see if I can. There we go. I think that ought to get me there. I've got a guest. I've got a secret guest here on the Real Estate Show. The Real Estate Show. And welcome back. For those of you just joining us here on the second half of the Real Estate Show, my name is Eric Willner. I am your host. We are here live with the ATM edition of the Real Estate Show, and we are talking about the money, and that's what ATM stands for. And as I was mentioning, at this particular juncture in the marketplace here, where we are talking about lifting the moratoriums coming up, whether it's within the next 30 days or whether it's in the next 60, even if they stretch it out for another 90 days. The fact of the matter is, we know that it is going to end. It has to end, right? This was a temporary stimulus in the face of this tremendous pandemic that happened March 11th of 2020 with the COVID-19. And now, as depending on which states you're in, you may be more or less open. As I was talking, this week on the show, I was up in Pennsylvania, which is one of the slower states to open up. and seeing sort of the aftermath of the businesses that closed down, never to reopen. We saw that in Florida, maybe to a lesser extent because we opened up sooner. And it was very insightful that some of our politicians that were seeing that, the only thing worse than a lot of people getting sick from the pandemic is a lot of people getting starving and then being sick as a result of the measures designed to prevent people from getting sick. And so here we are now, sort of unwinding a lot of these programs, trying to get back on track in a sound and solid economic sense. As I've been talking about here on the radio show for weeks, is that the object of the game, from the government's perspective, okay, and understand this is from the government's perspective, is to have as soft a landing from what we've been doing. In other words, we know that it's going to bring down, there's going to cause a spike in foreclosures because inevitably there are people who have been affected by the pandemic who have not recovered. In fact, as I have said all the way along as well, there have been a number of people who were affected financially that were in a distressed situation before the pandemic. The pandemic only made it worse for them, and in many cases they weren't able to recover. It wasn't a matter of if they were going to lose their homes, lose their business, close up shop, get divorced, whatever. It was a matter of when. And the pandemic sort of, while it accelerated most things, accelerated medicine, it accelerated technology, accelerated the learning curve in a lot of different ways. It was really, as I have said here on the show, it was the great accelerator. But for others, it was sort of the frozen moment in time. And for now coming up on, what's this, 12, 15, almost 16 months, coming up on 18 months, it was basically a frozen time. And some people, believe it or not, and I've spoken to some of these who have basically been frozen in time, paralyzed by what was going on. And so they didn't take a lot of the advice that we talked about. If you recall, when we first went into the pandemic, I said, freeze what you're doing, take a good, hearty assessment, get a budget, create reserves, go to cash, and be ready for the next move. And then we had our next move and our next move. And as you can see, those who did that are in a great position today, and as great as can be. But there are also some great opportunities that lie ahead of us. And it will not be the big that eat the small in this case, but the fast that eat the slow. So if you're taking advantage of all the information that we're giving here on the Real Estate Show, sharing both the stages of recovery in the economy, the status of the marketplace, what to do in the marketplace. And that brings us back to our conversation today about the money. And we were talking about understanding and having more cards in your deck, more arrows in your quiver, and understanding that you should be equipped with not one, but several financing options before approaching either a new deal or getting out of the deal that you are currently in. And that could be, as a homeowner, in forbearance, trying to figure out, how do I get out of this gracefully? How do I get out of this alive financially? Because the one thing, and let me say this, I don't say always or never about very many things, but one thing that you never want to have and that you always want to avoid is foreclosure. And you got to do whatever it takes, whatever you can, to avoid foreclosure. There are at least 7 to 9 different ways, depending on your situation, that I can offer you. But as time goes by, those options fall away because some of those require more time. So don't wait until they lift the moratorium to say, hey, now the writing's on the wall. I'm going to have to leave if I don't figure something out. And now you've got 30 days to do it in. Some of these techniques, some of these strategies, some of the banks, and you can imagine even from the backlog that there will be for those people who need these alternative, creative financing techniques. They there's going to be a line, and you don't want to be rushing the exit all at the same time. So as I mentioned, cashing out, refinancing, and sometimes it may be one property for another, might be the subject property for the subject property. It might even be something else, refinancing out of a business, refinancing out of, an RV, a boat, or something like that, to create that catch-up cash that you might need to get out of a forbearance situation, for example. As I mentioned, and it's funny, I get these, deer in the headlight looks when I said, by the way, do you by chance have a home equity loan? Yeah, I'm not using it, so I can't use it now, right? No, maybe you can use it right now, and maybe now you should use it. And there's some strategies and techniques, how to budget, how to create a reserve with it, et cetera, et cetera. Then let's talk about personal loans. One from one person to another, oftentimes from a relative or a good friend or somebody that needs to trust you in some way. That a personal loan, which is often not even collateralized, but it's based on your good reputation and your good history, a personal loan may be a good thing to do. And don't get hung up on interest rates. This is one of the things where someone was talking to me last week, and they're saying, yeah, but they wanted 5%, and the banks are giving 3%. Are you kidding me? 5% will save you. The banks aren't giving you, I said, can you get a loan from the bank? Well, but no. And I said, well, if they charged you 10%, I would take a look at it. And the question is, now you got to do some budgeting. And that's why, as I mentioned in the first half of the program, and tomorrow we're going to talk more about, is it better to refinance or to recast a loan? And I'm going to give you the answer to that tomorrow. But understanding how to budget for, let's say, at least the next 6 to 12 months, whether you use the cash out, the home equity line, a personal loan, sometimes you may have an option of going to the owner if you're using private financing. You can do this. A lot of investors do this buying an investment. In fact, even homeowners will buy, and the seller will hold back a note or paper, basically be the bank for the buyers. And seller financing is another technique. And just remember that these are not exclusive solutions. These are solutions that you might do a little bit of this and a little bit of that, right? A little bit of a personal loan plus some seller financing, because oftentimes a seller wants to know you've got some skin in the game. Lease options. We have helped in the past folks do lease options or sell and lease back possibilities on some financing. And so that's a possibility. Very creative. Here's another real creative one that you might not have thought about it. You may be having trouble with your home loan, but have money in an IRA or a 401k. Well, that 401k or that IRA just might be the thing that saves you going forward. Hard money, that's a whole other topic. Maybe we'll bring that up again tomorrow. Private money, as I mentioned, that's different from personal loans. Private money are private individuals that act as lenders, but they go through the whole paperwork. They're just not as rigid on credit scores and income verification and those sort of things. And believe it or not, FHA loans are still an option in this marketplace. And one of the new things, the new kid on the block, is crowdfunding. So there's a whole bunch right there for you to think about. We'll be back again, same place, same time tomorrow. So in the meantime, well, while you're out there, drive safe and make it a great day. Bye-bye. I've got this crazy creature crawling around, knocking the camera. All right. Thank you. Take care. I was trying to make sure he wasn't stepping on keyboards and activating things that shouldn't be activated or deactivating things that shouldn't be deactivated. Anyway, Erica, Sylvie, Cindy, Hey, Bob. I'm going to go ahead and wrap it up at this point, but wanted to say thanks for joining in. Make sure you give us a like. Make sure you share this broadcast out there as well. Thanks again. What's up, Kat? You almost knocked down my Facebook camera.